Me, I want money.
I know money is coming. Money is coming. Eh?
Me, I want money. So the definition, okay, let's go through it, but I don't take it serious.
Okay, take it serious.
Mm,
Okay, forex trading is a process of speculating on a currency prices to potentially make a profit. That's the big picture you want. Currencies are traded in pairs. So by exchanging one currency for another, the trader is speculating on whether one will rise or fall in value against the other.
mm,
The most important part to take is make a profit. So I
mm,
think I've not shown you how currencies are paired. Have you seen something like currencies being paired?
mm,
Have you seen? Now currencies are paired like let me get something. Currency pair. What's wrong with my keyboard? But I think it is in one of the slides. In one of the slides I made. I'll show you. It is around. You see this? You see examples on pips.
mm.
If euro USD, so this is a currency pair. You get?
Okay.
Here we are trading euro against USD.
Mm,
So we are going to buy the euro at the same time selling the dollar.
mm.
You get? And
Yes.
when the dollar gains value against the euro, we are going to sell this pair here. This pair here.
Okay.
Are you seeing now that some things let me include it here. Control V. This is euro USD. We have another one called, this is gold. This is how gold is quoted. Mm. That's how they quote gold against a dollar. Then this is how they quote a pound against a yen. You see? Uh,
Mm,
this is how they quote silver. I think it is XAG against USD. You see? These are all called currency pairs.
okay.
These are currency pairs. So the first one is called a base currency. Then the next one is called a quote currency. Mm. Uh,
What and what?
the first one, this one is called a base
Mm,
currency. Mm.
mm,
Then the second one is called a quote currency.
yes.
Now, uh, there is some more literature that you'll read about currencies. I think when you come to fundamental analysis, it is to be covered in the topics. It's a featured topic we shall look at.
Mm,
Fundamentals are the ones that drive these currencies here, like the employment rate in the US, the GDP. Yeah, you know those things. I hope you
mm.
did some economics.
GDP.
Ah,
those, those are usual stuff.
okay. Yes.
Mm,
What else? What else? Yeah. Now, when we anticipate that the euro is going to gain value against, is going to gain value generally,
mm,
we are going to look at buying this pair. Mm, mm.
okay.
But when we see that the US dollar is going to gain strength again, the US dollar generally is going to gain strength, we are going to look at selling this pair.
Okay.
Yeah, I think I'm going to include more about that I mean after the lecture.
Mm,
These are some of the topics that are to be covered. We have anatomy. It's called the candlestick anatomy. Eh, like Candlestick anatomy, this is the naming. Just anatomy is the name. Then we have candlestick patterns. Candlestick patterns. Then we have market structure. We are going to see what market structure is. We are going to see multi-time frame analysis, pips calculation, margin requirement, very important. This one here, very important. Then technical analysis, fundamental analysis, and the intermarket analysis. This is mainly for currencies, the ones I've talked
Okay.
about. Now for indices we shall only require technical analysis. Technical analysis.
Mm,
Then we have lot size calculation, volume calculation. We have how to use the trading platform, the one on your PC. Have you opened it already?
not really.
Yeah, as we are talking, you'll be opening it. Then we have support, and resistance. We have risk management, psychology, and chart types. I think these I've just updated them right now. So
Okay.
our next topic is now the candlestick anatomy, the naming of candles.
Mm,
Candles. This is where the money now is. You want to make money. This is where the money is. So now,
mm, that's what I want.
so
Eh,
like we have something called the bearish candle and bullish candle. Bearish candle is a candle that represents many sellers in the market. Then bearish candle represents many buyers in the market, and this is how they are named. They have five main parts. We have, this is called the open. For the bearish candle, it opens above and closes below. You get, sellers push prices down, so it opens up and it closes down. So for its case, we have the open. This one's called the open high. Open high. This top here, open high price, open high. Then this one here is called close low. Have you seen? Then this one is the body.
yeah.
This one is the body. Mm. And
Mm,
these upper lines, they are called wicks, like the wick of a candle, or at times they call them shadows.
okay.
Yeah, for the case of a bearish candle, it opens up and it closes below. Now, the opposite is true for a bullish candle. Have you seen? It opens low and closes high. Open low, close high. You're seeing the difference?
Okay. Mm,
You're seeing the difference, eh? And these candles,
yeah.
many people represent them differently on their charts. Some may go by default using the green color for bullish, and red color for bearish. Others pink and white. Others black and white. Others red and blue. So color preferences are according to individual choice.
Okay.
So I hope you've understood the difference between a bearish candle and a bullish candle.
I I have.
Okay, so now talk some more little about the bull candles. Bull candles their preferred colors is green, blue, and green, white, etc. They represent buyers in the market who tend to push prices higher and higher to the roofs. You see how price is moving up. Now these are these are buyers pushing the market higher, and we are also seeing that the candles are, we are seeing very many blue candles in this trend. Okay, seeing it means
Okay.
buyers, this financial asset during this period, buyers were in control. And now small bullish candles represent small buyer interests. You see here there were some small buyer interests we shall see on the chart. Then big candles means more buyers are in the market. As the figure, many buyers were in the market with great force pushing prices higher. For the case of the bearish candle, the opposite is true. These people, their most preferred color is red and white. they represent sellers in the market who tend to push prices lower to the bottom. At times, yeah, bottom to the floor. Uh, a small bearish candle represents small seller interests. Big bearish candles represent more sellers in the market. As the figure shows, we are seeing very many red candles, meaning that sellers are pushing the prices of this financial asset below to the floor, as we have said here. And then these are the most important candlesticks I would want you to master, because my strategy and the strategy you're going to learn is alongside these candlestick patterns. Mm. So we have
Mm.
this candle is, which candle is this? This one I'm pointing at.
um, I can see written there bearish, but I'm trying to remember whether it's actually the one that opens up and closes low, the bearish candle.
Yes, yes, as it is written there, red color for this case, it is bearish. Green is bullish.
Okay.
You get, eh?
Mm.
The color only differentiates them, eh? Mm.
Okay.
The color differentiates them. So this is a bearish candle, this is a bullish candle. Mm.
Mm.
But now when we put a bearish candle besides a bullish candle, we form a bullish engulfing. A bull candle engulfing a small bearish candle. The pattern is called bullish engulfing.
Okay.
Do you get that?
Yeah, but now, now about this bullish engulfing.
Yes.
Whenever I see such,
Yes.
whenever I see such, what does it mean?
It means buyers are overpowering the sellers. So we look for opportunities of now buying. Hmm? If we were in a
Buying or selling?
no buying, because see, buyers have engulfed the sellers, have overpowered. This is power, have overpowered these sellers here.
Mm.
Eh? It means
Okay.
we are going
Mm.
in future. I will tell you when to buy and when to sell after seeing this pattern form. Okay,
Mm. Okay.
you've gotten it.
Yeah, I have.
Yeah, just in case you're in a sell and you see you're in selling, you've been selling down, and you see this pattern form, you can prepare to exit the market.
Eh,
Yeah, that one I will show you in the future.
eh.
Yeah, I will show you in the future. So just cram that when a bullish candle engulfs a bearish candle, that's called a bullish engulfing. Bull is engulfing.
Mm.
Yes, and I've written a
Yeah, it's
period.
well.
Yeah, yeah. I hope this literature is known to you, so let me not go through it. Now we go to the next candlestick pattern. It's this one. The opposite is true. Mm.
Okay. Mm.
We have bearish. A bear candle is engulfing a bull candle. Mm. You seeing? And and
Okay.
remember our bear candle opens from low and closes above. Okay. While a bearish candle
Okay.
opens from above, closes below. Okay.
First, go back one step. We see opens above and closes below. I can see is bearish, not bull.
Pardon? Bearish bearish opens from above and closes below.
You see the bearish candle is the one that opens up and closes below.
Yes. Now look at a bull candle. It opens below and closes above.
Mm.
Are you getting confused somehow?
Yeah, that now that is the bull.
Ah, have you seen that?
No, it's well. So now, here, which one is engulfing the other?
No, here there's nothing engulfing the other. We are just going back to the candlestick anatomy, the naming of the candles. But here, the bearish, big candle.
No, I don't know whether you're getting. This is okay.
Yes,
No, I mean where mm,
here,
the bearish is engulfing the bullish.
here.
No, here I can see the bearish opens up and closes below.
This is the naming of the candles.
Bullish opens. Yes.
Mm.
We get back to where we've been. To the other slide. That one.
Yeah,
So I was asking which one is engulfing the other here.
the red candle. Don't you see how big it is? The red candle is engulfing the blue candle,
Mm,
the green candle.
okay.
And you've seen bearish candle to the left and bullish candle to the left and bearish candle to the right. You're seeing these namings here.
Yeah, I do.
Yeah, at times the colors should not confuse you. Bullish, at times it is blue or green. For bearish,
Okay.
it is always red.
Yes.
Eh? Are we okay? We go to the next slide.
Yeah, we continue.
Ah, another another thing is here. This one is called a bullish harami. You see how it
Mm,
looks like? Now, the it gets its naming from bullish harami basing on the candle in front. This one here, mm,
okay.
a, a bearish candle is engulfing a bullish candle. It's called bullish harami. Eh?
Mm,
And you see the open and the close are very well designated.
yes.
Mm. Here, a big bear candle engulfs a small blue bull candle in the order of bearish bull candle pattern. Mm. Have you seen a bull candle? This is a bearish candle. This is a bearish, written a bearish, a bear candle engulfs in bracket encloses a bull candle. You see? You see that
Okay.
we are
Mm,
making some corrections. Uh, oh, we are making some corrections. Uh, so is it well?
is it doing what?
Is it okay? Have you understood this pattern? Bearish harami. I mean
So bullish
a bullish harami. Yes.
a bull a bear candle engulfs a bull candle.
Uh huh.
A, a bear engulfing a bull,
Yes.
that is bullish harami.
Yes. Yes. Yes.
Go back one step. This is a bear engulfing a bull. Uh-huh. Then back, go to two.
Wait a bit. Wait a bit. Besides a bull candle, a bear candle engulfs it. To two. Which two? This one here.
The previous slide.
This one.
No, the slide just before where we are.
Here.
No, how come that the screen is not changing? I can still see bullish Harami.
We go to the next. Okay, you read the slide number. Is it 9? We're here.
Go. I think we were 9. Let's go to 8.
What could be the problem?
It's no longer
It's no longer
the screen is no
moving.
longer moving.
Let me check the problem here. What's wrong?
Who is Amelia?
Amelia is my niece.
Is your who?
My niece.
You're stealing his computer or what?
No, I just love using her name.
Let me not laugh in capital letters.
True, 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 true,
So
true.
we are at bullish Harami.
Yes.
Let's go back one step, one slide. Bearish engulfing. So bearish engulfing, can I call it a bullish Harami?
No.
Now we can see a bear engulfs a bull.
But check the order. The bull is first, then the bear is next. That's why I put in the order of bull, bear.
In the
Eh?
bull, bear.
Bull, bear.
So the bear is engulfing the bull, but the order is bull, bear.
Bull, yes.
Okay. First, go back another slide, one slide. Go to slide 7.
Wait a bit. Think I've gone to 7, but it's not shifting.
Toilet data, I've sent you money, you buy.
I've bought. I've bought. Has it changed?
We are still at bearish engulfing.
Let me first stop sharing. Then I stop sharing. Then I reshare
It's
again.
like your sharing goes only in front, it doesn't go backward.
I don't know. That's where the Tagari is. When you understand those patterns, chigenda kwangwira. Therefore, you want to hurry to make money, yet you have not understood the patterns yet.
Me, I don't. I just want the European education system, not the Ugandan one. I want us we go to the market.
Eh,
You should we do like this and this. I follow through. Period.
eh,
Not first study up to masters before working.
oh, shall crash. I think you can now see my screen. Let me go back. Let me go back here. Ah, it has not yet shown. The money you're going to make it. Just give, don't. You're not going to take a very long time.
I actually want to learn the basics and I start trading.
I think you can see my screen.
Yes.
There we are.
So bullish harami,
No,
we have
here. There first.
okay, bullish engulfing, it's a bear, then the bull the other side.
Yes.
That is bullish engulfing. Then
Mm-hmm.
we go to the next.
The next. It is taking decades to change.
Mm, you don't have good network where you are.
Already changed. It changed the slide, but it is stuck.
Tugende mu maaso, let's just continue where we had reached. Tugende mu maaso.
Sure.
Mm.
Did it change?
Yeah, it's changing. We are now at 10.
Yes. Can we go back?
No, we continue.
So put much emphasis on the slide 7, 8, 9, and 10.
Already I'm putting kubanga mbadde sibitegedde.
Now, have you seen a bearish harami?
Okay. Bearish harami.
Tugende mu maaso.
We continue.
So we have different types of charts. This one's called a line chart.
Mm.
Like the way you mark a chart on in senior 4 you used to draw charts. So here these charts are being marked by the closing prices only. If we go to the chart, this is the close of this candle. You're seeing it where I'm pointing the arrow.
Mm.
And now when we switch up here, when we switch up to line chart, line chart, it is here. Have you seen?
Your cursor is not moving this side. You mean this line I can see in the middle?
Which line? I don't know. What could be the problem?
Like at spread, there is a line.
At spread.
If you look at the farthest data window spread, that line, is that what you mean?
The horizontal line?
Yeah, the horizontal line.
No. That is different. Okay, you see the charts. You see the candles on the chart.
I can see them.
Now, when you merge, when you keep on marking the closing price of each candle, that one. You see where my cursor is pointing?
Yes.
Now, when we switch back to candlesticks, this is the close of this candle here.
It is the what?
The close of this candle. You see this candle here? The close of this candle is right there.
Yes.
Now, when we switch to line graph, it is going to mark this point. It's going to mark this closing point here as the point of interest for the line graph.
Okay.
It only considers closing price of each candle to mark. Okay.
I get it.
Now, for the case of the candles, this one you see they are displayed automatically as you can see right now on the chart. That is called the candle the candle chart. It represents the candles which have open low, close high for bullish, open high, close low for bearish.
Mm.
And then we have another type of chart called the bar chart. This one represents bars. Like here, we have bars. eh? We have bars. Right now we have bars here. You're seeing them. Mhm.
Mm.
This one is a bullish candle. I mean a bearish candle. This is a bullish candle. This is a bearish candle. Bearish candle opens low, opens low, open lower, then pushes high, closes above. You're seeing?
Mm.
And these ones you can get them from here up here. These toggles. You're seeing up here,
Mm.
top right of the screen.
Okay. Mm.
Yeah, so those are the different types of charts we encounter, but commonly people use candlesticks because they speak much more louder than the other two. But for professional traders, they use this kind of
Mm.
chart. They use this kind of chart, mm, the bar
Okay.
chart. Yeah, so all candles are suitable. It is now your choice of preference to use any. But line graph is not good. It's good to some extent, but I don't use it. So, now are you seeing this anatomy of the bar chart? This is for bullish candle opens low, boom, high, closes.
Mm.
Then for the bearish candle opens high, closes low. Yeah,
Okay.
a sample is below down there as we have seen previously.
Okay.
Now we come to the next thing called the time frames.
Mm.
A time frame in forex trading can refer to any designated unit of time in which trading takes place. You see, for the candles,
Mm.
when we switch to 5 minutes time frame, we go on a live chart candle 5 minutes time frame. It means for this candle, it means it is going to 5 minutes time frame. It will take 5 minutes to print this one candle. Eh? Again, it takes another 5 minutes to print this one candle to finish. Hmm? Does it make sense?
Yeah, that one will. I still remember in the lecture we had from Muntinda.
Ah, and you see, right now it is printing. It goes up, pushes down, goes up, pushes down. 1 month, 1 week, 1 day. So time frame I think is covered. Uh,
Yeah.
this circular thing on the left, this is for Android. So this is how you access the Android version of the. I mean when you click in the middle of the screen of MetaTrader 5 on the phone. This is how you choose
Mm.
the time frame. Now,
Okay.
for the case of Windows, this is what we see, as we have already seen. This is what we see. So we keep on switching from one time frame to the next.
Mm.
I think that is covered too. Now, the market structure. Hmm? Market structure is really very important. If you want to make money in the market, this is where the money is. Now we
Mm.
have three different types of market structure. We have a market called uptrend market. Uptrend market. This is where buyers are pushing the prices higher. Uh,
Mm.
this is Then we have the downtrend. Downtrend. This is where sellers are pushing the market lower. So we look for more opportunities of selling. Then
Mm.
a sideways or consolidation market or ranging market. This is an undecided market whereby buyers and sellers are fighting against one another. Tug of war. Who is going to be stronger than the other? Tug of war. So,
If I may, if I may ask,
yes,
um, uptrend, um, uptrend we are doing what? We are buying, we are selling.
we look for opportunities of buying uptrend.
Uptrend we want to buy, then downtrend we look for opportunities of selling. Eh?
Yes, yes.
So that other third one is called what? The
Consolidation.
undecided one. Is it advisable to trade?
Yeah, it is advisable. It is not advisable to trade. Let me say that. don't trade. Maybe if you're desperate, you can say, let me enter, but you're going to lose money in that kind of market.
So it's not advisable to trade during
The
the one
consolidation.
ranging.
Yeah, or ranging, it's not advisable. Mm.
Yes.
Just stay away. If you see it ranging, stay away. Can close the terminal and do other things. Now wait until it
Mm,
starts to break off the range. Mm. It may
yes.
it may break off the range to the upside or to the downside, depending on which side won the war.
Now that is clear.
Very clear.
Mm,
So we can also profit from this market because we can identify the support and resistance. So when we wait for price to come here and we see our candlestick patterns form, we buy. As we target the top here, our resistance, as take profit. Then again, when it reaches here, we sell and we target. So it's like that.
mm.
But it's not really good to trade in this kind of market. But if you're desperate, you can trade it.
Nga
So
ng'owulira oyagala ssente.
kituufu, yes. But it's good to switch to another currency or another asset if the other one is consolidating.
Okay.
Right now, next we have support and resistance. The support support occurs when falling prices stop, change direction, and begin to rise. Support
Okay.
support is often viewed as flow. Support is the flow. Take for instance in a house, we
Mm,
cannot pierce through the flow, so that is our support, which is supporting or holding up prices. Mm. So resistance is the opposite of support. It's a price level where rising prices stop, change direction, and begin to fall. Resistance is often viewed as ceiling, keeping prices from rising higher. Yeah.
okay.
Now take for instance here, when you go on this chart, with the strategy that I will be teaching you, I can say this is resistance, the seeing or the ceiling.
Mm.
Then this is support.
First, to go back a bit, I need to get support and resistance properly.
Okay.
Okay, you mentioned, just tell me from here, huh? Support is what?
Support is a ceiling which prevents prices from going higher. Have you seen? Like here, the market. This resistance prevented the market from going higher, so it continued going down.
Okay.
Then this is support. I'm recording. I'm recording this thing, so I'll share the video just in case you don't get something. This one is support. Prices came. This support prevented the prices from pushing lower, so it turned and it went up. So that is the difference between support and resistance. But I hope, do you have these slides open? Because I'm seeing these things are lagging a bit. The network is lagging us a bit.
So, are we using like another 20 minutes? Then we can do at night, maybe.
Yeah. Okay, let me explain. Let's do a 20 minutes, then at night we can go on a live chat.
Okay.
And we proceed with the demo, we buy and sell, we put our support,
Mm,
stop loss, take profit, blah blah blah.
yes.
But for support and resistance, you've seen
Yeah, I have.
support and resistance found on higher time frames like 1 week, 1 month, blah blah, are more solid than those found on small time frames. As the saying goes, you'll always hear buy at support and sell at resistance. This is a very common saying. Uh,
Okay.
Now, this next picture represents support and resistance. You see here,
Mm,
you see this is a bearish harami. a bull candle first, a bear candle next, forming a support, a resistance, and boom, preventing prices from going higher. Thus, the market reverses and continues down.
Okay.
Likewise, the same scenario here. Then a bullish harami, you see they formed support, preventing prices from going below, and boom, the market reversed. Okay.
Okay. Mm.
The next, this one you have explained it. You have seen a bullish harami. I mean, this is a bullish engulfing. This picture is a bullish engulfing. I think
Okay. Mm.
you've seen it.
Yes.
A, a bear candle is being engulfed by a bull candle, and boom, prices were pushed higher. So next here we have now, have you seen our support? Support, resistance, resistance. Mhm. There is a lag. Are you seeing there?
Okay.
Yeah. So this is a bullish harami pattern. This one here.
Mm.
Then this one is
Mm.
a bullish engulfing. Okay.
Those ones I will learn in Pola Pola.
This
Those
one.
ones.
This one.
Now for you, you see, you look at red before blue green. I'm ever colorblind.
Anyway, you're going to learn this bullish, bearish engulfing. Yeah.
Colors are not my thing. So, but for you see, immediately you see red before blue, you're like that is a bullish haram. What?
No, no, no.
Now those
Eh,
the,
I beg your pardon.
the moment you see like red before blue,
Red.
you already know the name.
Yeah.
Me, I still need like 3 months to master them.
I've told you. You want to go to a live chat yet? Okay.
Yeah, I want to go to a live chat.
And you see it physically.
From there, I want to learn the basics.
Okay.
Eh?
So we continue.
Mm.
Now we have pips calculation. Pips is where we make the money. There is some saying which goes that let's ride on the piece of the pips.
Let's do what?
Let's ride on the piece of the pips.
Mm.
Yeah. So for the case of the currencies,
Mm.
this is a price quoting from I think it is a GBP USD. And this is how we read the pips. You see
Mm.
the last digit here, the 2 at the end is called a pipet. A pipet.
Okay.
Then this 8 here is called pips. We start reading pips from it is the fourth digit after the decimal place. This is the decimal place 1, 2, 3, 4. This is a pip. Then these are 38 pips. Then this is 500 pips. This is 1000 pips. This is 10,000 pips. You get it?
Mm-mm.
And the screen is stuck, but as the drawing says, you're seeing the 8.
You read through.
I read through the literature
You
or
you probably had,
I'm skipping the literature.
and I'm saying you read through. Maybe I understand
Okay.
because I can see you've probably had the term pips, points, pipettes, and lots thrown around.
Now, you probably yes thrown around. The unit of measurement to express the change in value between currencies is called pip. Okay.
Mm.
A
Mm.
pipet is the fifth digit on a currency pair. You're seeing the 2 at the last end. It
Mm.
is the fifth digit after the decimal place, right?
Yes, so that is a pipette.
Yes, that's a pipet. A fifth digit. Now, for a pip,
Mm.
it is the fourth digit.
The 8.
Yes, the 8.
So why are you putting pips everywhere?
Of course, you see, they are changing. You see, 8 pips, 30 pips, 500 pips, 1000 pips, 10,000 pips.
Okay.
Is it making sense?
Somehow.
But pips in full, it's percentage in points. That's how the percentage in points, that's how it is in full.
Okay.
Is it making sense? Making sense?
Yeah, I get it.
Okay. We go to the next examples on pips. If Euro USD moves from 1.1050 to 1.1051, it means that the currency pair has increased by 1 pip. That's the next slide. It's what I'm reading. I don't know why it's not reflecting here. Is your PDF open?
Next slide osazeewo gisomeweka.
Iye tuse. Are you seeing that first statement? Are you seeing it?
Yeah. Yeah, I can see the slide now.
Have you seen that it has this value here has moved to this by 1 pip?
Which value?
This value of 1.1050 to
Eh,
1.1.
yes.
When you get the difference is 0.0001, right? The fourth digit is the pip.
Okay.
Making sense?
Yes.
Now for the next example, for instance, if GBP USD moves from that value to the next value, it means it has moved higher by 1 pipet. Making sense?
Because pipet is the fourth digit,
Yes.
then a pip is the third.
No, a pip is the fourth after the decimal.
Then a pipet, a fifth.
The fifth, yes.
Okay, we continue.
Now, the next example is about gold. When gold moves from that 1889.23 to 1890.00, it has moved higher by 97 pips when you get the difference between the 1890 and the 1889.23. Making sense?
Yeah.
Yeah, this next example, ignore it because it is not GBP USD. I'll just change it. Let me highlight it. I'll change it.
Okay.
Now, are you seeing the graph? You see it moved from support here. When we get this difference from here to here, we shall get the number of pips. And let's do the math together. I hope you're seeing the value higher.
The value is where? On the right.
Yes, on the right in a black square. You see? You subtract that higher value, the lower value from the higher value, and you tell me the digit you get. I'm also subtracting here.
I can't see properly. The screen is small.
Okay, the upper value is 3717. You writing?
You said 37.
17.50.
Calculator ng'ekyabuze.
Wandika wansi.
37.
3717.50.
Okay.
Then the lower value is 3411.
3411.12. 306.38.
Yeah, those are the number of pips that asset has moved from down here to up here.
Okay, the way you're mentioning it, like maybe is from down there to up there.
From down here, are you seeing this engulfing, this bullish harami here,
Mm,
to up here to this candle which is called a hammer, yeah? To the up of the
mm,
hammer where this line is,
yes.
those are the number of pips this asset has moved.
Okay.
Yeah, likewise, when it moved those number of pips, it came down from up here to down here. Again, the same number of pips, but it is superseded because this I just cropped it.
Mm,
So that's how you calculate pips. Then next, we have pips on currencies. If we have currencies, let me show you how you read the pips. Are you seeing this chart? This confusion. It's called confusion to you now.
that is real confusion.
Are you seeing on the first one here, top right here, where there is XAG euro here?
Mm-hmm.
We are seeing 20 small, 63 bigger, then 5 small.
Obisomawa.
The lower figures, top right corner, I mean top left corner.
2059 5, 2059 5, eh?
Yeah, yes.
Mm, mm,
Are you seeing the small 5?
yes.
The small 5 is called a pipet.
Eh.
Then the 9 here, it is a pip.
Mm,
Then 5, those are 59 pips. Ontegede.
okay.
Then when we come here to the next, which is XAGUSD, which is 21995.
Yes.
Eka 5 is what?
A pipet.
Then the 9, the first 9.
A pip.
Then the next 9.
Those are dollars.
The next is 99 pips.
The next one becomes 99 pips.
Yes.
And then the 21.
The 21, it becomes the
Mm,
1 becomes 199 pips. Then the
mm,
21 becomes 2199 pips.
everything is pips.
Yes. Measurement. You get.
Okay.
But now, right now, the difference between this buy value and the sell value, it is called what? It's called spread. Are you seeing?
Mm,
Do you see it? The spread is here. The
I
difference.
can see spread 24.
It means the difference between this and this, it is the spread, and it is from that spread that the brokers also profit.
Okay.
Ka commission kaba broker bakajja mu spread, just master that.
Eh,
We are going to the next. Are you still sober?
I think we don't we have like 5 minutes
Okay, 5 minutes, 21, we are closing.
before I go to the ministry report. Otherwise, I will be fired.
But now, are you
Eh,
seeing volatility index 10, volatility 10 index around here?
volatility 10, I can see volatility 50.
Where I'm dragging the, okay, 50. No, here,
Even even 10, I can see.
where my cursor is.
Your cursor is that volatility 50 index.
50, where? Wait.
Extreme right.
extreme right.
topmost.
Okay, here. Okay, extreme right. The next one to the left is 25.
Extreme right.
Okay, can you see 25?
Volatility 25 index I can see.
Now the 5 here, are you seeing this 5, the 29.5 on the buy side?
The 29.
29.5, yes. Where the cursor is playing there.
Yes.
The 5 is what?
You're still on the pipettes.
Yes. This is, you seeing the heading up there, it is pips on derived financial assets.
So this is the same thing like 1,710,295 pips.
Yes, we have 5 pips, 9 pips. I mean, 5 pipettes, 9 pips, 29 pips, blah 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 blah.
Mm.
Yeah. So I think we shall continue from there because this is another fresh topic. I think at night we
Which
shall,
which is the fresh topic now?
the fresh topic we shall start from types of market orders, which is the next slide 25.
Types of market orders.
Yeah, we shall go through that and we finish, then we go to the live chat.
Mm.
Eh,
Okay, cool. I'm learning. I'm still learning like any Ugandan.
truly.
I want to go. Me, I want to go on the what on the live chat.
Yeah, we are going to test it. We are going to test it tonight.
Eh,
Hey, what's it? Anyway, we didn't discuss school fees, so I even don't know how much school fees we're going to pay.
school fees you'll be paid after I have made money.
After you've done what?
After I've made money. So you want me to pay school fees before you want to put me back to this Ugandan education system?
Okay. So let me continue
Where,
teaching
where,
you.
where you pay, but you don't know how much you're going to get out.
Yeah, I don't know. Let them Somesa continue starving as he will go on strike.
No, the semester needs to teach me.
Hey,
We, we go on live chat and make money. Then he takes some money.
okay.
Hey, that
Uh,
that 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 should be the right system.
okay. Meanwhile, I will give you this recording because I've been recording.